All right, ladies and gentlemen, thank you so much for joining us. My name is Vukosi Mashele. I must mention that the Technical Hub Stage 1 is loudly and proudly sponsored by One Titanium. Ladies and gentlemen, it's time for us to move on with our program. And up next, I have Keryn Tsimitakopoulos, all right, from S&P Global Commodity Insights. And the title of her presentation is Unlocking Africa's Deepwater Potential. Ladies and gentlemen, let's give her a round of applause.
Hi, good afternoon. Okay. All right. Okay, so just take a moment to note the disclaimer slide. All right, so this chart shows the past 25 years of global new field wildcat drilling, the well counts, with the bars colored by terrain. You've got the grays for onshore wells, the lighter grays being the shelf areas, and going into the deeper blues for the deep water and ultra deep waters. The trend lines on the chart show the percentage of wells drilled in ultra deep waters, with the darker line showing the global trend and the orange line showing the Africa trend. We at S&P Global, we generally define deep water as anything from 200 meters water depth and ultra deep waters of water depths exceeding 1,500 meters. So basically, global exploration drilling wells were cut significantly during the oil price crash of 2014, and Africa followed a similar trend. But the shift into ultra-deep waters, you can see this happening globally around 2008, and in Africa from around the 2010 mark. Proportionally, the wells drilled in ultra-deep waters is relatively small, but this really delivered the volumes. The other thing that's interesting to see on this chart, if you're looking at the trend lines, is that ultra-deep water drilling in Africa, the proportion of wells in ultra-deep water diverges from global trends as new basin frontiers opened up. And this generally occurred in the early 2000s when activity picked up in the Congo Fan and the Niger Delta basins, around the 2010 to 2017 mark, where the East African plays opened up in the Rovuma and the Mafia deep basins of offshore Tanzania, and also in West Africa, Kwanza, Cote d'Ivoire, Tano basins, and the MSGBC basin. Then more recently, 2021 till now, we've seen drilling in the Orange Basin, the Cote d'Ivoire basin, also the Namib and the Herodotus basin offshore Egypt. So proportionally, currently, ultra-deep water wells in Africa is currently double the global average. And if you're looking at planned wells, this is forecast to grow to about 20% of all NFWs with planned campaigns coming up, while the global trends will remain roughly around 7% of total wells. Oh, sorry, there's the planned wells forecast. So this map is showing that near 110 billion barrels oil equivalent have been discovered globally offshore in the past 10 years, with significant volumes coming from frontier deepwater basins. With accumulated resources ranging from 20 billion to 5 billion BOE respectively, the Guyana, MSGBC, and Orange basins rank in the top 3 basins during this time period. Success offshore Guyana and Namibia has really sparked interest in testing similar Atlantic margin plays. Note, though, that Rovuma is not shown on this map because those discoveries were made between 2010 and 2014, but these are going to come up on a further map. So Africa boasts a third of what is considered to be global deepwater prospective basin areas. The dots on the map are showing completed... I've been looking for you the whole time. The dots on the map show completed, active, and planned high-impact wells. We define high-impact wells as generally exploration wells that are capable of significant commercial or geological impact, so that generally resource estimates of around 250 million barrels, or if they play or basin openers. The 2024 discoveries in the Herodotus, Orange, and Cote d'Ivoire basins have really proved Africa's ultra-deepwater high-impact well success. High-impact wells offshore Africa now account for around 25% of global high-impact wells. And new frontier deepwater basins are being explored offshore the Cote d'Ivoire Tano Basin, Liberia Sierra Leone Basin, the South African Orange Basin, the Volphus and Namib basins, and the Gabon-Douala deep sea basin. This chart basically supports the map that we've just been looking at. It essentially ranks the top 20 global offshore basins this past decade in terms of oil and gas resources recoverable or discovered during that time. The bars are colored, again, to indicate water depth, so you've seen the shell areas are moving into deeper waters. What's interesting is that half of all offshore resource additions were made in ultra-deep waters. It's also interesting to note that 8 Atlantic margin basins fall within the top 20 global basins. Those are 4 LATAM basins, Guyana, Campos, Suriname, Santos, and Guyana Basin has yielded 20% of resource additions during this time. There are also 4 West African basins, and those have yielded similar total recoverable resources. These are notably the MSGBC, Orange, Kwanza, and the Côte d'Ivoire basins, and the Congo Fan Basin falls just outside of the top 20 for this period. Another thing to note on this chart is that 50% of global offshore resource volumes come from the top 7 basins only. So looking at the chart on the left, you can see that the significance of African ultra-deep water drilling has really strengthened since the early 2000s. With around 18 billion barrels oil equivalent recoverable since 2015, you can see that this has really boosted Africa's ultra-deep water contributions to almost 70% of all offshore resource additions in the last decade. This achievement really invites upstream capital and to tap into these deep water opportunities. Looking at the chart on the far right, you can see that in general terms, we see an increasing average field size in water depths exceeding 1,000 meters. Note, though, that only a few wells have actually been drilled in water depths exceeding 2,500 meters, and the average field size will change over time because we typically do target the biggest structures first. So which plays are being targeted in ultra-deep waters? Historically, tertiary reservoirs have yielded half of Africa's total recoverable hydrocarbons. Those were being discovered in the Nile, Niger, Congo basins, just to name a few. But the West African Cretaceous turbidite plays have really evolved since the early 2000s. These plays tap into hydrocarbons maturing and migrating essentially from the Aptian-Albian source rocks. Near 10 billion barrels have been discovered offshore West Africa in the past 5 years, and 80% of these come from deep water clastic Cretaceous reservoirs. So these stratigraphic plays now contribute to a quarter of all Atlantic margin discovered volumes. Looking at this chart on the right, this is an example of successful Cretaceous basin floor turbidite fan plays, essentially looking at cumulative growth curves for the Guyana and the Orange basins. While the Guyana basin led upstream activity for the past 10 years, new discoveries show that resource growth in the Orange sub-basin is comparable to the first 4 years of the Stabroek block. So that being essentially 4 years of exploration, 6 billion barrels, 5 to 6 billion barrels oil equivalent. Production started in Guyana after 4 years from the first discovery, while the Orange Basin is still awaiting its first FID. So what are the limits to deep water exploration and field development? This chart shows Africa E&P activity with maximum annual water depth for well depths, fields discovered, and production startups. We see that technical success for drilling and discoveries plateaus around the 3,000 meter watermark. Globally, 20 discoveries have been made in water depths exceeding 2,500 meters water. Developments beyond 2,500 meters generally require more costly custom-made solutions, and you also got to consider that if these are frontier basin areas, you've got to consider the cost for first mover. So the field economics often mean that all but giants are either marginal or uneconomic. Globally, 23 new field wildcats have been discovered in water depths around the 3,000 meter watermark. These have yielded 4.2 billion barrels oil equivalent, but 68% of those resource volumes are in Africa, and those are essentially from 3 discoveries in the Orange Basin and the Tano Basin offshore Ghana. The geological risks around the 3,000-meter watermark, well, there's a few of them, but generally it is questions around source rock maturity with geothermal modeling as you move from the continental crust onto oceanic crust. There's also the consideration of sediment composition and pathways in these distal fan systems, and the possibility of sediment pooling to enhance net pay. So the Orange and Otaniqua basins, with this is accommodated by a counter-regional dip of the basin floor. Oh, sorry, there's the plateau on the 3,000-meter watermark. So I know this chart looks a bit busy, and I'll give you a moment just to get your head around it, but looking at the map on the left, over 60 billion barrels oil equivalent has been discovered offshore Africa since 2010. 90%, or more than 90% actually, has been from deep water domains. This chart also shows the relative proportion in terms of resource volume, but also the proportion of oil and gas during this time. What we can see is that 4 basins accumulated more than 4 billion barrels oil equivalent, that being the Rovuma, the MSGBC, the Côte d'Ivoire Tano Basin, and the Orange Basin, or sub-basin. The Kwanza Basin not being far behind. Looking at the chart on the right, and I put a block around the period that relates to the map. This chart is showing, just note that this is really looking at deep water to ultra deep water, so the axes are going from 800-meter water depth up. It shows the evolution of oil and gas discoveries offshore Africa, with the bubbles colored by oil being green, oil and gas mix in orange, and pure gas fields in red. What's interesting to note is that you can see that where the East African gas players in the Rovuma and Tanzania basins really came in between the 2010 and 2015 mark. This is also a time when gas discoveries were made offshore Egypt with Zohr, the Kwanza Basin, and the Mauritania-Senegal discoveries. In most instances, explorers were searching for liquids but found gas. This is the first period in Africa's offshore history when gas actually eclipsed liquids. The giant gas discoveries essentially reignited solutions for the energy transition, but it also highlighted the challenges for monetizing gas resources offshore Africa. There's been rejuvenated interest in West Africa's deepwater basins, with exploration being planned in ultra-deep waters of the Orange Basin, the Côte d'Ivoire Tano Basin, the Niger Delta Basin, Congo Fan, the Gabon-Douala Deep-Sea Basin, Namib, and the MSGBC basins. High-impact wells to watch would be Azul's Kianda 1 well offshore Angola, Shell's Volcano well in offshore Sao Tome's Principe, and Shell and Total's wells in the Orange sub-basin, moving into South African waters. Successful outcomes will really underscore Africa's potential, and operators of nearby blocks will watch as they map prospects of similar plays. So this bubble chart is essentially the exact same bubbles you saw before, but they've now been colored to show field status. So the grays being fields that are discovery and appraising status. Then you've got fields awaiting development and those that are developing or producing. More than 80 billion barrels have been discovered in African waters in more than a kilometer water depth. Recent project startups take Africa's ultra-deepwater producing fields to 16. Some of the most recent startups being the Agogo West Hub in the Congo Basin, Eni's Coral Field offshore Mozambique in the Rovuma Basin, which started in November 2022, then the BP-led GTA project offshore in the MSGBC Basin, which started up in December last year. What I'd like for you to take from this slide, though, is that only 20% of ultra-deep water resources have actually been sanctioned and developed to production status. That means that more than 80% of these resources have yet to be commercialized or remain at risk of being stranded. Once sanctioned, another point is you see the Venus discovery up there. This discovery along the 3,000-meter isobath will be the deepest oil field development in the world, because currently the deepest producing fields will be the Shell-operated Tobago and Stones fields offshore Gulf of Mexico, which started up in 2011 and 2016 respectively. Other exciting new developments would be the Kwanza Basin's first field development with Total Energy-led the Camino project, which should come online in 2028. You also have Total and Exxon's projects in the Rovuma Basin, which are the large LNG projects. Ultimately, field recovery per well, or barrels of oil per kilometer squared, is the make or break factor in these oil field economics and viability. Gas is often the biggest challenge, though, to sanction, not only for gas finds, but also deepwater gas-rich oil projects. 41 fields with statuses of appraising and awaiting field development exist in water depths of more than 1,000 meters. These are mostly in East Africa, but there's also 12 of those fields in West Africa. Reasons range from lack of infrastructure, which is a key one, political stability, international openness, the fiscal policies, gas content, and domestic market access. So what is Africa doing to monetize the gas? They're looking at multiple solutions, in especially developing the gas markets in Africa, domestic gas markets. But where that isn't a solution, Africa's really been leaning into FLNG as a relatively adaptable option to develop these resources. So this chart shows FLNG fields by field water depth, not necessarily the unit water depth. So the globally, the global FLNG units are shown in orange, and Africa's FLNG units are shown in blue. What's interesting to note, though, on this chart is that Africa is really leading with production and planned FLNG projects in ultra-deep waters. At the 2,000-meter water depth, the Eni-led Coral Field started producing gas in 2022 and has proven successful. They've now got approval for a second FLNG project in the Rovuma offshore for the Coral North. BP GTA project is moored, the FLNG unit is moored in shallow waters, but it does tap into fields exceeding 2,800 meters water depth. Looking at new FLNG project proposals, these are being considered in the Congo, Niger Delta, and MSGBC basins as well. The increasing number of FLNG units in Africa can be seen as an indication of the continent really adding to the global gas market, but you also need to consider competition with US and Qatar LNG projects coming online in the next few years. So the ultra-deepwater basin areas are mostly the realm of the global super majors. The need for specialist equipment and technologies mean that ultra-deepwater acreage is dominated by well-funded internationals. So looking at the number, these bars show the proportion of licenses with GRC interests compared to other companies, being NOCs or other independents. Basically, 12% of offshore licenses in ultra-deep waters, 12% of offshore licenses are in ultra-deep waters, and GRCs have interest in 70% of those blocks. Super majors have shown a shift away from onshore focus and onshore to focus on their deepwater assets and growth opportunities. A prime example of this is the Niger Delta Basin, where there was a series of divestment deals and announcements during 2024 by Total, Equinor, Eni, Exxon, and Shell, all to domestic operators. There was generally a 40% decline in onshore acreage, while they maintained their offshore acreage by 30% of the license area. Another interesting thing is Azure Energy expanding out of Angola and into the Orange Sub-Basin. Farm-ins and blocks on offer are available in ultra-deep waters in the Côte d'Ivoire, Tano Basin, the Douala Deep Sea Basin, Orange, the Gulf of Sirte Basin, MSGBC Basin, the Sierra Leone Liberia Basin, and the Mediterranean Ridge. So who are the players here? So if we're looking at net resource discovered in deep waters over the past 5 years, Qatar Energy, the NOC, is leading these total net resources because they partnered with both Total and Shell in the Orange Sub-Basin. Total, Eni, and Gulf second that with their discoveries in the Orange Basin and Côte d'Ivoire basins. By partnering with majors, smaller independents like Rhino Resources and Impact fall within the top 10 companies in deep waters for this time. Another interesting one to watch will be Murphy Oil, who'll be drilling 3 wells offshore Côte d'Ivoire. NOCs from outside the region have generally been expanding their portfolios globally, partnering with majors to taking up their own operatorship of blocks. Qatar Energy, China's CNOOC, Malaysia's Petronas, and Brazil's Petrobras are just some of those to mention. They've been making big moves. So considering near-term planned and potential final investment decisions, deepwater drilling tended to be less robust than other terrains in previous years, with West Africa being slower than the LATAM and the Gulf of Mexico regions. However, we've really seen a rebound in the last 2 years, with higher utilization rates resulting from activity ramp-up in the Côte d'Ivoire Basin, Niger Delta, Congo Fan, Orange, and the Eastern Med basins. The outlook for the continent's deepwater basins is really encouraging. Looking ahead, we see that African region leading near-term deepwater and ultra-deepwater upstream project sanctions to 2028. This really highlights the continent's emerging role in the global deepwater upstream sector. Significant investment is anticipated in this increasingly competitive landscape. Deepwater CapEx, which includes exploration and appraisal drilling, offshore Africa is set to double to nearly $40 billion by 2028. The deepwater basins offshore Angola, Mozambique, and Nigeria will make up about half of this expenditure. Pragmatic government policies in Angola and Nigeria have really facilitated upstream investment to stabilize and reverse production decline. Other significant capital outlays are expected in Namibia, Libya, Côte d'Ivoire, Egypt, Mauritania, Ghana, Senegal, Congo, Equatorial Guinea, Gabon, Cameroon, Tunisia, and the Orange Sub-Basin of South Africa. So last infographic before I wrap up. So these two pie charts, the one on the left shows basins for offshore production, Africa's offshore production broken up by basin. And currently, and the chart on the right is showing the forecast in the mid-2030s. So total output could almost double into the 2030s to around 9 million barrels oil equivalent per day, if we can overcome the above-ground challenges and move fields from appraisal and discovery status into development status. Note that the 2035 production also includes existing sanctioned but also as yet unsanctioned projects. Currently, offshore production for Africa is, offshore production is half of Africa's total production. Less than half of Africa's total production. But this will increase to over half, 55% of Africa's total production by the mid-2030s. So you're going to see more production from offshore than you're going to see from onshore. We're also going to see a lot more gas coming in, with the percentage of gas in the total mix going up from 36% to 43% for offshore. Nigeria and Angola will continue to lead output from the Niger Delta and the Congo Fan basins, but the emerging Côte d'Ivoire and Orange basins could rank in the top 5 offshore producing basins. The Côte d'Ivoire basin is also forecast to displace the maturing lower Congo basin, and the Kwanza basin will also come in with Total Energies' Camino project. Okay, so what I'd like for you to take away from this. Africa is increasingly becoming a pivotal player in the realm of global ultra-deepwater exploration and development. We see this in some of the deepest wells being drilled in the world. We see this in some of the deepest oil and gas field developments in the world and the deepest water FLNG developments in the world. Exploration in offshore frontier basins offers opportunities for substantial new discoveries. And this is shown by nearly 25% of global offshore high-impact wells being drilled in Africa, all of which focus on deep and ultra-deep water plays. While international operators have seen success in African deepwater basins, this is mostly the realm of the global super majors. Despite the promising potential of Africa's ultra-deepwater basins, though, about 80% of these volumes still remain unmonetized. But this indicates a vast opportunity for further development and investment. Strategic cooperation between the operators, partners, and the governments, fiscal competitiveness, and technological advancements are really transforming how operators manage this complexity and risk. Major producers such as Angola and Nigeria are expected to maintain their dominance in the production output, while countries like Namibia, Mozambique, and Cote d'Ivoire are really set to alter the landscape of production. If you'd like a copy of this slide deck, you can scan the QR code on the press. Thank you.
Thank you so much, Keryn. That was absolutely incredible. Do we have any questions for her? Any questions?
Ian. Be nice, Ian.
Good morning, Keryn. Ian Cloker-Fentra. So one of the big challenges over probably the last 5 years, let's say, is drilling rigs have really gone up in price, the drill ships. You know, the 15, 16, 17, 18, 19 period, we were paying $125,000, $150,000 a day. That's one big lever that sort of pushes your minimum commercial size up. What technologies has IHS been looking at that could potentially sort of counteract that and take your minimum commercial threshold down if your cost of finding and developing is up against you? I see you in the audience, Justin, as well, so you might be able to help Keryn if...
I'm looking at Justin.
I think it's a big one for the next stage of life of deep water, because the majors will take it so far, and then you get the smaller players come in who try to do... We've done it on the shelf. There's ways to reduce price. Yeah. But deep water's a real scratchy head place.
Yeah. Well, Justin, you can follow me, but I think some of the key things, first of all, IHS is now S&P Global. But I think the key thing that I try to point out in the beginning is when you're looking at ultra deep water, that we are looking for the bigger plays, and that's these Cretaceous turbidite plays. And you are looking for where you're getting the big net pay parts of those discoveries. The other thing, Justin, I'm sure there's more, but partnerships is a key part of the whole equation. And then there's the fiscals, negotiating the fiscals.
Of course, it's the fiscals too, but there's a strange thing that we've noticed, that the costs at about 2,000 meters and 3,000 meters are not linear. So, no, that's this. It doesn't ramp up like that. The costs don't shoot through the roof as you would expect. I mean, they're not good, but they're not as bad as you might think.
All right, thank you so much. Any other questions for Keryn? Going once, going twice, and sold. Thank you so much.
Thank you.